Self-employment taxes. Who needs to pay them? How much do you need to pay? And how can you get through this as painlessly as possible? I'm going to walk you through the key things you need to know to stay on the IRS's good side and avoid major headaches during tax time each year. Hello, business heroes. I'm Dave, your self-employment sidekick, here to help navigate you through the not-so-fun aspects of working for yourself and to share some advice and tips and tools on how to get the most value out of your business. Speaking of value out of your business, taxes. An overcomplicated stew of math, loopholes, and disappointment. But they pay for schools and roads, so what are you gonna do? Quick disclaimer, I'm not an accountant or a tax lawyer. But I did stay at a Holiday Inn Express, and I have over a decade of experience paying taxes. And I've learned some things along the way to streamline the process of me giving the government some of my money. Now, your mileage may vary. Everyone's situation is a little bit different. So if you're unsure about anything, don't hesitate to reach out to an accountant, a tax lawyer, or somebody else who isn't me. But this video should cover most of the bases for most people. So let's start at the very beginning. Who needs to pay self-employment taxes anyway? You, most likely, if you're watching this. You could be a full-time freelancer or just grub-hubbing a few hours a week on the side. If you make over $400 in non-employee compensation in a year, that is, your income isn't being reported on a W-2, it's not coming from an employer who is withholding taxes on your behalf, then you are responsible for paying taxes on that money. You don't need to be officially incorporated. You don't need an EIN, although that's not a bad idea. Technically, you could be a babysitter or a kid with a lucrative lemonade stand and you'll need to pay taxes. The Internal Revenue Service is kind of heartless. This is not the good news part of the video. This is the heads up, you're on the hook, so make sure everything's buttoned up part of the video. Typically, you should be receiving a 1099 from most people who are paying you as an independent contractor, but that might not always be the case. Even if you don't get a 1099 for a job, you're still responsible for reporting all of your income. Quick sidebar. There's legally no such thing as under the table. Cash is convenient and it's harder for the IRS to smell it, but I'm not about to tell you to do anything below the bar in these videos. You're really supposed to report it all. Sometimes, not all the time, but sometimes people will offer to pay in cash so they can lowball you. Hey, you don't have to pay tax on this, so I can give you a little bit less and you'll take home just as much as if I paid you a big fat check just for Uncle Sam to take a chunk of it, am I right? No, you're not right. Politely thank them for offering to help you participate in some light tax evasion, but ask for the big fat check. Or cash, or Dogecoin, or 40 pounds of Omaha steaks. However you settle up, you're going to need to pay tax on it, so charge accordingly. You're a professional, dang it. Get paid what you're worth. That's another video. End sidebar. Now, how much do you need to pay? If you're just starting out, plan on setting aside about 30% of each paycheck for taxes. But don't worry, you probably won't have to pay all of it, but save it. When you're a W-2 employee, your employer is responsible for paying half of your Social Security and Medicare taxes. When you're self-employed, you have to pay the employer share as well as the employee share of those taxes. 12.4% for Social Security and 2.9% for Medicare. 15.3% total. Then you need to account for state taxes and local income taxes. If you live in a state like New York or California where your state income taxes are pretty high, you might want to save even more than 30%, maybe closer to 40 or 45%. But you only need to pay taxes on your net revenue. This is key. That's whatever is left over from your paycheck after you deduct business expenses. So let's say you sell ice sculptures for weddings at $1,000 a pop. And every gig you have to pay about $200 for the giant ice block, refrigerated truck rentals, and chainsaw maintenance or something. After you spend that $200, you have $800 left over. That's what you get taxed on, not the full $1,000. So instead of setting aside $300 for each gig, that's 30% on $1,000, 30% of $800 is $240. So you dial it in and learn that maybe you could set aside only 24% of each paycheck and still have enough money to cover your tax liability. That's just a small sample of how business expenses can play in your favor and the importance of tracking your business expenses. Let me know in the comments if you'd like me to go a little bit deeper into business deductions in another video. But again, if you're just starting out and you're not too sure about your business expenses, it's best to err on the side of saving too much. When it comes time to file your annual return, it's usually always nicer to find that you have more money in the bank than you need instead of finding you don't have enough to pay your tax bill. Which brings us to the next question. Where do you put this money and how exactly do you pay your taxes? First, open a new bank account. You don't want to mix up your personal finances with your business finances. All of your business income should be deposited into a new business account, and all of your expenses should be paid out of this business account. Don't buy chainsaw parts and ice blocks on your personal credit card. You want to keep your accounting as clean as possible. Then, open another bank account. This is where you'll put all of your tax holdings. Every time you deposit a check, right away, transfer out the 30% or whatever you've calculated into the savings account. And don't touch it. I like Mike Michalowicz's idea. If you're able to change the name of your bank account or give it a nickname, call it the government's money. Because that's what it is. Don't mistake yourself that it's something safe to spend until you pay your tax bill, and if you have anything left over, you can give yourself a little tax refund. If you use Novo Bank, which I highly recommend, they have a cool feature called reserves, which are kind of like buckets or mini accounts that you can use to hold money for specific goals or purposes. Perfect for setting aside tax savings. Or you might consider opening a high yield savings account like Marcus, which puts the government's money a little bit further out of reach, and you can earn some interest to boot. Another tool you might want to check out is called Catch. I use this for a little bit. It's pretty cool. You can sync your business bank account and it will detect any time a check is deposited. It'll prompt you to transfer a portion of that check. It'll slide a portion of your paycheck into Catch and then automatically divvy up that money into different goals like tax savings, time off, healthcare, and whatever you want. They have a premium feature that actually takes care of submitting your quarterly estimated tax payments for you as well. If you don't know about quarterly estimated tax payments yet, hang on for just a moment. We're going to touch on that. But first, let's talk about your annual tax return. I am not going to walk you through how to fill out Form 1040 Schedule C. I'm not going to pull up a worksheet and crunch numbers, try to figure out the deductible portion of your self-employment tax. Honestly, just buy TurboTax or TaxAct or H&R Block, Credit Karma, whatever. Let the software do the calculations for you. It's like $100, but the peace of mind and the time that you save using those tools are totally worth it. And usually these tools work well with other tools like QuickBooks and TurboTax are from the same company. So they're like this, and you can easily import all of your business income and expense information. So that part of your tax return is super simple. There's also Bonsai, Honeybook, Waves, FreshBooks. There's like 5,000 different services out there. I use and.co for invoicing, proposals, time tracking, and business expense tracking. You can just use a plain old spreadsheet. Just make sure you're using something to track everything. You can't accurately calculate your business income and deductions without good record keeping. I'll link to some of these tools in the description below for you to check out. Now, estimated payments. If this is your first year paying self-employment taxes, you really don't need to worry about this yet. But if this isn't your first time around the block, you know that the government doesn't feel like waiting to get your money. I meant their money. You need to make an estimated tax payment every quarter. Payments are due April 15th, June 15th, September 15th, and January 15th, which aren't quarters at all. They're more like a dime, a quarter, and 2 gold doubloons. But bad calendar division aside, the IRS wants you to estimate your tax liability, divide it into 4 even parts, and make payments throughout the year. Your state and local municipalities might have similar requirements. If you fail to make these payments, you might be on the hook for late fees or other penalties. It's a hassle, but it is kind of nice when tax time comes around and the government's like, hey, you gonna give me your money? And you're like, I already did. And then the government's like, yeah, that's right. Actually, I owe you some money. Here. Now, lots of freelancers don't know exactly how much they're going to make this year, so how do you estimate your taxes? It's actually pretty simple. The IRS allows you to just go off of last year's numbers. So even if you make less money or more money, if you pay 100% of last year's tax liability, you won't be subject for any underpayment penalties. If your adjusted gross income is going to be over $150,000, or $75,000 if you're married but filing separately, then you need to pay 110% of last year's taxes to avoid any penalties. You used to need to have an account with something called EFTPS, but don't worry about that anymore because now you can just make your payments directly on the IRS's website at irs.gov/payments. I'll link to that below too. And I mentioned earlier, Catch and some other services can handle quarterly estimated payments for you as well. For state and local taxes, the process may vary, but a quick Google search should hopefully get you in the right direction. Yeah, I think that's it. I mean, there's a lot more. The tax code's like 10 phone books thick, but these are the main things that most self-employed individuals need to understand about taxes to get started at least. So to sum it all up, yes, you do need to pay taxes. Plan on setting aside about 30% of your income to make sure you have enough money to pay your taxes. Keep your finances separate. Open a separate bank account and put all of your business income there, and a separate bank account to hold your taxes. Make sure you're tracking stuff, and after your first year of self-employment, plan on making your quarterly estimated payments. You'll get the hang of it. If this was helpful to you, please hit the like button so this video can get out there and help even more people. If you have any questions, fire away in the comments. If it's something I don't know, I know some other people and I can get some answers for you. I am here to help you out. You are doing something awesome. Whether you're a plumber, a web designer, an ice sculptor, a restaurateur, you're out there, you're doing business, you're generating value for society, and more importantly, for you and your family and the people you love. So no, I'm here, I'm in your corner, I'm rooting for you, and I got a lot more great content in the works to help your business survive and thrive. I'll see you in the next one. Thanks for watching.